Your strategy is not the problem. Your position size is. And right now, it is silently destroying your account, trade by trade, even when your strategy is completely correct. In the next 10 minutes, I am going to show you the exact math that proves this and the 3 simple rules that fix it permanently.
Let me show you what happens when a trader risks 40% of their account on every single trade. Their strategy wins 60% of the time. Sounds profitable. But here is what happens during 5 consecutive losses, which is completely normal statistically. Loss 1, account goes from $10,000 to $6,000. Loss 2, down to $3,600. Loss 3, down to $2,160. Loss 4, down to $1,296. Loss 5, down to $780. They lost 92% of their account. And their strategy is still correct. Still 60% win rate. Still working perfectly. But they are nearly wiped out by a losing streak that happens to every trader. The strategy did not fail them. The position size did.
Here is how most traders decide position size. If they feel confident, they size bigger. If they just lost, they size smaller. If they see someone else going big, they also go big. This is not strategy. This is emotion disguised as a decision. And emotion disguised as a decision will always lose to a rule-based system, even if that system is not perfect. There is one simple truth about position sizing that most traders ignore. Your feelings about a trade have zero mathematical relationship to the correct size for that trade. Zero. Confidence does not predict win probability. Fear does not predict win probability. Only your actual trading data does. There is a formula that tells you the mathematically correct position size for any strategy you trade. It is simple. Take your win rate, subtract your loss rate, divide by your average reward ratio. That is your optimal percentage to risk. Let me show you with real numbers. Your strategy wins 60% of trades. Your reward ratio is 2 to 1. The formula says 0.60 minus 0.40 divided by 2 equals 0.20, 20% of your account. But here is the most important part. Never use the full number. Use half of it, or even 1/4. Why? Because your estimates are never perfect. Your actual win rate in live trading is almost always lower. 2 traders. Same strategy. Same market. Same week. Alex and Marcus. Alex felt confident. He risked 15% per trade. When it was working, his account grew fast. But then came a 4-trade losing streak. Normal. Statistically expected. But at 15% risk per trade, Alex lost 48% of his account in 4 trades. His psychology collapsed. He changed his strategy, started over. Marcus risked 1% per trade. Same losing streak. After 4 losses, Marcus was down 4%. He barely noticed. He kept trading his system. 3 months later, Alex had blown 2 accounts and was considering quitting. 3 non-negotiable position sizing rules. Write these down. Rule 1. Never risk more than 1% of your account on any single trade. Not 2%, not 5%, 1%. This one rule alone eliminates the possibility of a losing streak destroying your account. Rule 2. Never increase position size after a winning streak. Confidence is not edge. Your win probability after 5 wins is exactly the same as after 5 losses. The market does not know your recent history. Rule 3. After a losing streak, decrease size, not increase it. I know this feels wrong. You want to recover faster. But the math says clearly, recovering from a 50% loss requires a 100% gain. Protect capital first, recovery second, profit third. Here is what nobody tells you about correct position sizing. It is boring. There are no dramatic wins, no 10x days, no exciting moments, just small, consistent percentage gains, compounding over time, while traders who oversize blow up around you. And that boring consistency is the only thing that builds real wealth in trading. Not the biggest trade, not the most exciting week, the most boring, most consistent, most disciplined risk management over the longest period of time. That is what creates the professional trader. Not skill alone, not strategy alone. Survival. Survive long enough, and your edge does all the work. The goal of trading is not to maximize profit. The goal is to survive long enough for your edge to make you wealthy. And position sizing is the only tool that guarantees survival. Not strategy, not indicators, not predictions. How much you risk on every single trade is the most important decision you make. Make it with math, not emotion. Drop a comment below. What percentage are you currently risking per trade? I read every single one. And if this changed how you think about sizing, hit subscribe and the bell icon so you never miss a video like this. I'll see you in tomorrow's video. Make sure to subscribe.